Welcome to the FedLife podcast with Dan Sipe from Serving Those Who Serve. In this podcast, Dan draws from years of financial experience to help federal employees overcome challenges that every Fed can relate to. Join us for this journey as we reach, teach, and serve to help you make the right financial decisions. Now, on to the show.
This is the FedLife podcast. Hello and welcome. I'm your host, Dan Sipe. Additionally, as you may already know, I'm the ranch manager here at Lee Sipe and Associates and Serving Those Who Serve, where our mission is to reach, teach, and serve the dedicated men and women who make up the civilian federal workforce. That's why we're here. I want to say thank you for taking the time to listen, and thank you for your service. You don't hear it enough, you're always going to hear it here, and I don't think you can ever hear it too much. The other thing that you can never hear too much of is the guru, Ed Zurndorfer. He is back with us again as part of that ongoing mission to reach, teach, and serve you. Now, as I always have to do, I have to say at the outset, the opinions of our guest Ed Zurndorfer are not the opinions of Raymond James of Serving Those Who Serve. This podcast is presented for information only, not intended to be taken as advice. All listeners should consult their personal advisors before taking any action. And if you do not have a personal advisor, go to stwserve.com, contact us. We will help you. Once again, we're going to follow Ed's FedZone articles, and they can be found at fed-zone.com. And that gives us one more way to reach and teach. Our episode today is going to be a mixture of timely and evergreen. The timely topic will be the 2021 Child Tax Credit, and our evergreen section will be the first of two installments, there will be one that follows this one, that cover our special provisions feds. Okay? So in this case, we'll be talking about law enforcement officers, air traffic controllers, and firefighters when we get to that. But Ed, let's begin with that child tax credit, or more precisely, the changes to the child tax credit as a result of the American Rescue Act. Ed, you opened the article saying that the changes are causing confusion and anxiety. How so? Explain that.
Oh my goodness, Stan. I have gotten more questions from my clients, tax clients. As you know, I have an accounting and tax practice.
Sure.
I've gotten more questions about this than you ever want to believe. It has kept me on my toes. The federal government started sending out checks for if an individual has children under the age of 17. All of a sudden, they see checks in their bank accounts, or they're getting them in the mail. And the question is, what is this for? Never heard of this. What did I do to deserve this? I said, you're raising your kids. That's what you're doing, and you got some assistance from the federal government. Oh, be more specific. What is this all about? And this is something called the Child Tax Credit. I have to give you a brief history lesson here, Dan. The Child Tax Credit has been around probably since the 90s. At that time, if an individual had a child under the age of 17, I believe they got a $500 tax credit at that time. $500 tax credit. And what is a tax credit? It's a reduction in one's liability, tax liability. It's a dollar for dollar offset on one's tax liability for the year, as opposed to a tax deduction. Tax deduction reduces one's income that's going to be subject to tax. You always want to get tax credits. Always want to get tax credits. And to make this even more interesting, this tax credit, it's something called a refundable tax credit. And you ask, what is a refundable tax credit?
What is a refundable tax credit?
Oh, you'll love the answer to this, Dan.
Okay.
If one has a zero tax liability after they include all their income and they compute their tax, and they've had taxes withheld from their paycheck or their annuity or their pensions, and they end up with a zero tax liability. What I mean by that is they owe no tax, but yet they have this refundable tax credit. That tax credit will be given to the individual in full, even though they have no liability now. No liability. Another type of refundable tax credit, maybe some individuals have heard about, it's called the Earned Income Tax Credit, the Earned Income, the EITC. This has been around since the early 80s, and one of the reasons it's been around is that when Ronald Reagan was president, he was trying to get people to go to work, to get off of welfare. And the idea being that if you had a job, even though you didn't earn that much, you would get credit because at least you're trying to make a salary. And they would give you this tax credit even if you had a zero tax liability in the end. Well, with the child tax credit, like many tax credits, tax deductions, there were income limitations. And in the early 2000s, while the tax credit amount, the amount of the child tax credit was increased to $1,000, they put income limitations on there. If one's adjusted income was too high, you may not qualify for the credit, and you might get some of it, but not all of it. Mm-hmm. But then, as a result of the passage of the 2017 Tax Cuts and Jobs Act, the child tax credit was raised to $2,000 per child under the age of 17, and they increased the adjusted gross income limits. I'll give you an example. My own family, our older son has 4 children, and thank God he and his wife make a good salary. So before the passage of the Tax Cuts and Jobs Act of 2017, he couldn't get any of that. They couldn't get any of that child tax credit of $1,000. But as a result of the Tax Cuts and Jobs Act, in which the AGI limit was more than doubled, he and his wife are getting an $8,000 child tax credit. You know, because their oldest son is now 12, so they got a couple more years to go on this, and they're thrilled. They're thrilled that they're getting this tax credit. So that was a brief history of the child tax credit until this year. Back in March, the American Rescue, I think it was called the Rescue Act. American Rescue Act was passed. And Congress expanded the child tax credit, but this has caused some confusion. Okay. Let me just go through some of the important changes that resulted as a result of the passage of the American Rescue Act.
Gotcha.
The age of a qualifying child for the tax credit was raised from age 16 to age 17. I think I mentioned the child had to be younger than 17 as of the last day of the year. If a child this year is turning, let's say, 17 this year, the parent is still eligible for the credit. I have to emphasize one thing before I go on, Dan. The changes I'm talking about now are only for 2021. This was not a permanent change to the child tax credit. It was only for 2021. It's very important individuals keep that in mind, because as of January 1st, 2022, they're going to go away. Okay, so and go back to what I was mentioning earlier about the $2,000 tax credit that took effect as a result of the passage of the Tax Cuts and Jobs Act of 2017. The tax credit amount was raised for certain qualifying individuals. We're not taking anything away from the original tax credit, currently $2,000 per child that most individuals can get. What we're talking about here is an additional amount that an individual is eligible for, so an individual has children, I should say, but if their income is too high, they're not going to get that additional amount. Additional amount. So, in a nutshell, that's what Congress did. We'll get into the specifics here in a moment. But I want to emphasize something else here. Someone may think they qualify for it based on their 2020 income, because the way IRS is doing this, they are pre-funding paying out this advanced tax credit to qualifying individuals. They started in July. Based on the individual's 2020 filing. the tax returns.
Gotcha.
And if their adjusted gross income was below a certain amount in 2020, then the IRS would fund their tax would start paying this child tax credit on a monthly basis, starting July 1st and ending on December 31st, 2021. We'll talk about what's going to happen come January 1st, 2022 for this year in terms of this advanced credit. I'll talk about that in a moment. But here's my point. Based on one's income in 2020, they could qualify for this extra child tax credit, but when they file their taxes for 2021 next spring, it may turn out because their income was higher in 2021 compared to what it was in 2020, that would mean they were not eligible for this extra child tax credit, meaning what? They're going to have to pay it back.
Gotcha.
And if we're talking about somebody getting per child an extra $150 a month, and they have, let's say, 4 children, $150 a month for 6 months is $900 times 4 children is $3,600, and they were not eligible for that. They're going to have to pay the IRS back $3,600. That'll be a shock.
Absolutely.
When you file your 2021 taxes. So in my article, I talked about some of the watch out, beware. And I know some of my clients who I talked to about this, they told me, well, I don't think it's just my feeling because our income's going to go up in 2021. I don't think we're going to be able to qualify for this. So here's what I told them. You can stop the advance payments. Yes, you can stop the advance payments. This way you are not going to be stuck with a big tax bill next spring. You don't want that.
Absolutely. Now that's a great tip, Ed.
It's very important. And, we're in August now, Dan. This is the second month IRS and payment payments. Now that we're getting settled in, kids are going back to school, we're going back to the office more, things like that.
Sure.
It is time to do an accounting. I always tell my clients, this is probably the most important time of the year to do an assessment of your taxes because come next January, it's too late.
Absolutely.
Too late. You want to start looking at your situation now before it gets too late. Because after December 31st, if something happened during 2021 that is going to result in a huge tax liability when you file your taxes, you don't want that to happen.
That's good advice. And folks, I'll stress this again. Bounce over to the FedZone, fed-zone.com. and read Ed's article on it because the examples make all the difference. He's got the formulas in there. And, the fact that he's put in there the IRS links and that sort of thing, if you feel you need to opt out of this, it's a great opportunity to do that. And I'm going to pause here and ask a favor. I'm going to ask you folks to specifically share this podcast because there could be a whole lot of people that are affected by this. And what you don't know can hurt you. So we want to prevent that. So please share this, share the FedZone articles, because this is one that could be pretty impactful for somebody. So Ed, let's keep moving forward, and let's go ahead and dig into our special provision feds because they're out there and we don't talk about them a lot. They're law enforcement people, they're firefighters. Including folks that might be out working on wildfires right now, which we all know is pretty hazardous stuff, and then the folks that we always don't even think about every time we get on a plane, the ones that are making sure that those planes don't smack into each other on the way up and the way down, the air traffic controllers, and believe me, folks, I really appreciate them because I'm a little bit of a nervous flyer. So Ed, you begin with the air traffic controller because in the article, the first thing you say is determining if you're in special provisions. Well, that's pretty straightforward. If you're working in a tower somewhere, you're probably an air traffic controller. That's obvious, right?
Either an air traffic, if you're working in an air traffic air traffic facility, like at an airport, or you could be a flight service station facility, something like that. But the
Sure.
person has to be actively engaged in the separation and control of air traffic.
Yep.
Or providing pre-flight or in-flight or airport advisory services to aircraft operators. We're not talking about a clerk who's just just working to say any type of, or an administrative person at the airport. We're talking about somebody who does specifically air traffic control, and you will know you are that when you look on your job classification on your SF50 at the end of the column, which just came out today. It'll be up probably tomorrow or Monday. It's part 1 of 2. I mentioned that you'll know you're an air traffic controller by looking on your SF50 box number 30. That's the job. That's where it gives you the code that is associated with air traffic controller, and that is the letter L. L is in Lonnie.
Gotcha.
That's how you know
Gotcha.
you're an air traffic controller.
And up next is firefighter. That should be pretty clear as well, if they know which job they're doing. And go ahead.
Yeah, well, a firefighter, and the same thing is true with a law enforcement officer, is someone who is occupying, quote unquote, a rigorous position.
Sure.
What is a rigorous position? Well, that's a position that involves a lot of physical, in some cases, and of course mental capacity. And when you reach a certain age, you're at the point where you don't have that physical and mental capacity to do those jobs, and which means that you cannot continue in that particular job category.
Gotcha.
Like for example, a firefighter should be open to basically to young and physically vigorous individuals whose primary duties are to work directly with controlling and extinguishing fires. I mean, look on the TV, look on cable, what's
Sure.
happening out there in the West. I feel
Yep.
sorry for those people. You just can't you can't be 70 years old and fighting fires. I'm sorry. In
Nope.
fact, we'll talk here in a moment. There is a mandatory a retirement date for a firefighter, just like it is for a law enforcement officer.
Sure.
A law enforcement officer has to be open to individuals who are capable of investigating, apprehending, or detaining individuals suspected or convicted of offenses against criminal laws or protecting the personal safety of the United States officials, like Congress, things
Sure.
like that.
Sure.
This is, but it's not just. It's just everybody thinks about just protecting, like the Capitol Police. But we're talking about like a drug enforcement,
Oh, yeah.
agency. There are agencies like IRS that have law enforcement officers that work for them they have to go out and then put liens on houses and things like that. This is not what you call really an easy job. Your life is on the line.
Gotcha.
And therefore, it takes a certain amount of ability to do this, but you have to be at a certain age. You cannot be too old, and therefore, like a firefighter, a law enforcement officer has a mandatory retirement age.
Gotcha. Now, one of the things you notice that, for example, Leos have the ability to stay in special provisions, but in a secondary position. Why don't you walk us through that?
Yes, I get this question quite often, particularly with Leos, that they reach the age, and this age is we'll mention this again, but when they reach age 57. That is mandatory retirement. They have to retire at age 57. They cannot work any longer. But maybe the Leo's working for an agency, let's say like ATF, alcohol,
Sure.
tobaccos, and firearms.
Yep.
They're no longer going to be a Leo, but they could be more administrative. They're working in the office there, doing things like that. They could continue, but they will not. They will not have the category of a Leo, though.
Gotcha.
They continue to work, and as I will write in my next column, they will still continue to accrue earn benefits, and they will accrue more time in the calculation of their FERS annuity.
Gotcha.
So therefore, they don't have to retire from federal service. They can do another job, and they will get credit, as
Gotcha.
well as being able to contribute to the TSP. They get full health insurance, life insurance benefits, things like that. Things don't stop. The only thing they cannot do is to work as a LEO.
Gotcha. And I noticed that your article jumped right into non-deduction service for special provisions. Why was that?
Federal service that is not subject to FERS deductions, such as temporary time.
Mm-hmm.
I got to tell you, in recent years, particularly when it comes to firefighters, it seems like California has been having fires for the last 20 years. It's just every year it gets worse in California, particularly. And I can remember this was about 10 years ago. The fires were so terrible that the Forest Service out there in California could not handle a situation with their employees. They had to hire temporary employees.
Gotcha.
To help them fight the fires during the fire season, which back then started in October. Now it seems like it started in March and it hasn't stopped since. But I remember very distinctly, it started in October. It got worse in November, and the Forest Service out there had to hire temporary employees to help them during that season. Mm-hmm. Well, these temporary employees were getting a salary, of course, but they were not covered by FERS. They were not contributing to FERS. They couldn't even put money into the TSP. Mm-hmm. So Congress very quickly changed the law and allowed these employees, these temporary employees, to become permanent employees, in which they would get the benefits. Well, for the period of time they worked as a temporary employee, as I say, they were not contributing to FERS. So now, looking back, they do have the opportunity to get credit for that temporary service by making a deposit and therefore getting credit for all the time they were working as a temporary employee. And that deposit will result in their getting credit for eligibility to retire. It increases the number of years so that they might be able to retire at a younger age than expected. And number two, they're getting credit for their temporary time by making a deposit in the calculation of their FERS annuity. Bottom line, Dan, more years of service, the higher will be your starting FERS annuity. So it's your advantage to make that deposit. So this law says specifically that the only temporary time that can be bought back is temporary time that occurred before January 1st, 1989. Mm-hmm. Any temporary time after that could not be bought back. Congress may change that given the status of what's happened out there. They might make an exception to the fact that if the Forest Service had to hire any temporary employees as a result of what's happened this year, and that's not just for California. It's all over. It's all over. That Congress may decide, okay, we have to let these employees make a deposit for their temporary time. Look, they put their life on the line.
Oh, absolutely, absolutely. Okay. All right. Well, let's get into the meat of the requirements for retirement. You already touched on, and let's reiterate them. All the special provisions have age requirements for retirement. Is that correct?
That is correct. I can mention here that the minimum age that an individual who is either an air traffic controller, a firefighter, or law enforcement who is at least age 50 and has at least 20 years of being an air traffic controller, a firefighter, or a law enforcement officer, they can retire at age 50. Mm-hmm. If they have 25 or more years under these job categories, they can retire at any age, with no penalty, no reduction to their starting FERS annuity.
Okay. And you also mentioned that, and we're not going to get into it here. It's going to be our next podcast. But you mentioned there's some special rules associated with the special retirement supplement. Folks, have no fear. It'll be writing on that in the next article, and we'll dive into that in the next podcast as well. We got you. Okay.
Well, it'll be out hopefully next week. The second of these series. You know, I write one every week.
Yep.
This will be part 2, where I talk
And they're also
about the calculation.
Yep. And you indicate there are also rules about the use of sick leave and annual leave, just like FERS and CSRS, correct?
That is correct. A firefighter, an air traffic controller, a firefighter, or law enforcement officer cannot use their accrued and unused annual or sick leave for purposes of meeting that minimum number of years of service. They also cannot use bought back military time.
Gotcha.
To be used to count towards their minimum service requirement.
Gotcha. And here we go. I'll see if I can get through this without stumbling. You also further clarify that a special provisions employee does not have to be in a special provisions position at the time of retirement to be covered under special provisions. Whew! That was a mouthful.
Yes.
So walk us through what that means.
Well, let's say an air traffic controller, a firefighter, or a law enforcement officer has their at least their 20 years. They're over age 50, or they're any age, and they have 25 years of such service, and they like to do something else.
Sure.
They're tired of the pressure of being an air traffic controller. The firefighters, they're overwhelmed. Law enforcement, they just don't have it. They don't have it anymore. They decided. When they get another federal job, they're not a special provision employees. They're just a regular employee doing whatever makes them happy. When they do finally retire, we'll find out, we'll see this next week on the next column, that in the calculation of their annuity, those additional years of service will add to what they earned as in this special provision category. They're going to add to what they have. Even though they're not, quote unquote, retiring as a special provision employees, they're still getting full credit for the amount of time that they worked under this category, under the category air traffic controller, firefighter, or law enforcement officer. Nothing is lost. Only gain. It's going to add to their retirement. Everything.
Gotcha. And finally, in this section, you talk about erroneous separation. Can you explain that?
I hope this never happens to anybody. Suppose an employee separates voluntarily as an air traffic controller, a firefighter, or a law enforcement officer, and they let's say they retire, and then they retire, and OPM's retirement office, they adjudicate the individual's retirement application, and OPM says, oh, wait a minute, this person really did not meet the eligibility requirements to retire. They did not have the number of years, they didn't have the age, whatever. They may have to go back to work. But here's the problem. If they're, let's say, they're over age 56, they're an air traffic controller, that's mandatory retirement. Age 57 for a law enforcement officer or firefighter, if they've reached age 56, they cannot go back in that occupation. They're going to have to go back and do something else. They're going to get credit for the years that they worked as an air traffic controller, firefighter, or law enforcement officer, but they're going to have to go back to work in order to meet that minimum number of years of service to retire.
Wow. Yeah, let's hope that doesn't happen to anybody we know.
I always tell individuals, Dan, always check your SF50. I'll repeat the box number 30, box number 30, and I will just mention again what that code is. I mentioned the code for an air traffic controller. Check your SF50 box number 30 code. If you are a law enforcement officer or a firefighter, you should have the letter M, Michael, M, in box number 30. If you don't have that M in there, please don't pass go to personnel to find out why you have the wrong code in there.
Gotcha.
Air traffic controller, letter L, Lonnie, should be in box number 30. Don't be a victim of having the wrong job classification, retire, and find out, oops, you got to go back to work. You don't want that.
Absolutely. Okay, so let's kind of round out with reiterating those mandatory separation ages. So, air traffic controller, 56.
At 56, used to be 55. They raised it to 56. Law enforcement officer, firefighter, age 57. 57.
Gotcha. And folks, number one, the article has easy to read charts. It's going to help you a lot. We're not leaving you hanging here. We're going to come back with more articles and another podcast getting into the calculations. Because the other part of this is these folks in these demanding jobs that have a shorter career span have a different calculation for the pension, as well they should. So we are not going to leave you hanging on that. You know, my Leos, my firefighters, my ATC folks, don't worry, this is coming. And the thing to remember, once we've got it up in the Fed zone, it's there forever. You can go back and search it out. We'll always update evergreen stuff, but we will keep that in there for you. So we have more coming on this, right, Ed?
Absolutely, and I'm sure, Dan, you will talk to the gurus, the higher-ups at Serving Those Who Serve. If there's any agency out there that has special provision employees, we'd be more than happy to do a special webinar just for them on their benefits. Wouldn't that be a good idea, Dan?
Pass it around, folks. Have you folks get in touch with us. We will happily set up a dedicated webinar.
We'll do anything you want. We will do it.
Yep, reach, teach, serve. That's what we're all about. And so let me ask you this though, Ed. If one of our Leos or our air traffic controllers happens to be attending one of your first webinars, is this something that you might touch on in there as well?
If they have a specific question, like for example, next I think in 2 weeks we're doing a FERS webinar. We'll explain everything about FERS. And I really do not have time to go into specifics about how the special provision employees, how their situation differs from the regular employees. But if any firefighter, air traffic controller, law enforcement officer is attending, feel free to ask any questions that might be unique to you.
Sure.
I'm more than happy to answer questions because, as you know, Jennifer Meyer and Matt Kramer, who assist me in those, are waiting for your questions. Put them in the chat box. There is no such thing, Dan, as a dumb question. We love those questions.
Absolutely. And further, all of our webinars do have something called Part 2, where you have the ability to get a one-on-one education. Because sometimes, I've been doing this for 35 years. I wish I had a nickel for every time I attended something and then thought of a question on the way home. It just always happens, or, and I'm sure this is not a unique experience, I'll be very excited, come home, share it with my wife, and then she'll ask 3 questions that I should have asked. So that's why we have Part 2 as well. So at any rate, brother, it still amazes me how you keep up with all this, but I appreciate what you do for the feds, and I appreciate what you do to teach our team. We just keep getting better and better, and certainly grateful for all that you do.
Thank you. My pleasure, Dan. Thanks for giving me this opportunity. I really get a lot out of it, helping people, helping federal employees, and I cannot emphasize enough. I really encourage employees to tell their fellow employees, tell their friends, their neighbors, everybody. To attend. We have every type of webinar possible when it talks about benefits. We're always willing to add others.
Absolutely.
In terms of benefits, we're all our ears are always open to suggestions. And again, I learn from myself when I'm writing the materials. I learn a lot too, and the more I write, the more I learn and pass on to fellow employees.
Absolutely, and to our team at Serving Those Who Serve. So we're getting better with every interaction, folks. If it's important to you, it's important to us. So be sure to let us know. And we are Serving Those Who Serve. Be sure to subscribe to this podcast on our YouTube channel and Spotify. And please remember, share it with friends and strangers. Do take time to check us out on Twitter and LinkedIn. And do not forget those live webinars every week. Just go to the STWS website. That's stwserve.com. You'll see the webinar button. Click it. It's going to take you to a full page. A lot of times we have 2 separate dates up for every one. We always strive to do that. So sign up for one, sign up for all. Share that page with your friends. They will thank you. Do not miss Reading Ed every single week of every single month in the Fed Zone, and every now and again we even get some special ones in there. We've also got great content from Jen Meyer and Benefits Ben, so we make sure that we are pushing the topics that you want to read about and the information that you want to learn. It is all searchable. So, wrapping it up for Ed, the crew in Serving Those Who Serve, and me, Dan Sipe, good luck, Godspeed, and above all, please remember, it's your FedLife, so make it a great one, because you deserve it. Stay well, everybody. We are out.
Thank you for listening to the FedLife Podcast. Click the subscribe button below to be notified when new episodes become available. The information covered and posted represents the views and opinions of the guest and does not necessarily represent the views or opinions of Serving Those Who Serve or Raymond James. The content has been made available for informational and educational purposes only. The content is not intended to be a substitute for professional investing advice. Always seek the advice of your financial advisor or other qualified financial service provider with any questions you may have regarding your investment planning. Securities offered through Raymond James Financial Services Incorporated, member FINRA SIPC. Investment advisory services offered through Raymond James Financial Services Advisors Incorporated. Serving Those Who Serve is not a registered broker-dealer and is independent of Raymond James Financial Services.
Raymond James is not affiliated with and does not endorse the opinions or services of the quoted professionals or their respective organizations.